It's a big, noisy universe of stocks out there. Welcome to Goodbye or Goodbye. Our goal to help cut through that noise to navigate the best moves for your portfolio. Today we're taking a look at sports media stocks in a matchup between one intellectual property owner and a distributor. What's the best way to play it right now? I'm here with Chris Marangi, co-CIO at Gabelli Funds. Thanks so much for being here.
Great to be here.
Appreciate it. So let's get to your buy stock first, and it is Atlanta Braves. Now this is an interesting one. You were, interestingly enough, not the first person who has talked to us about this stock, but it is not one that's widely held or that is as much talked about within the sort of media space. The shares are down over the past year about 8.5%. But if you look at it, you talk about the loyalty that people have, right, to something like the Atlanta Braves.
Sure, I know everybody wants to talk about AI today with NVIDIA. This is in many ways the anti-AI play. This is in person. This is a 150-year-old company. It's the oldest continuously operating sports franchise in North America, the Atlanta Braves. There are very few opportunities to own sports assets in the public markets. This is one of them.
And as you talk about owning sports in the public markets here, we have seen in the private markets that there's been a lot of growth. So this shows here on this chart the NFL and where we've seen that growth, the NBA, the MLB, the NHL, and the compound annual growth rate altogether is 16%. So in the private markets, we have seen that growth.
Sports assets have appreciated actually greater than the S&P over this time frame. They've been great stores of value for lots of reasons that we'll talk about, but there are, again, very few ways to participate.
Yeah, there aren't very many ways to participate. So what's interesting is that you say that the Atlanta Braves are trading at a discount to that private market value, which is sort of counterintuitive.
Well, so first you start with what the private market value is. First, we calculate the private market value of the team based on where other sports teams have transacted in the market over the last 10 or 20 years.
Okay, and we have a look at that actually.
And these are some of the recent comps in various leagues. The Phillies are the most relevant. They sold a minority stake for 7 times revenue. We value the Braves at something like 5.5 or 6 times revenue. You add the value of the real estate, which they have around the park, and you get to a value of something like $3.5 billion for the company, divided by the 62 million shares, and you get to a stock price in the high 50s versus 40 today. Okay,
gotcha. So that is a considerable discount, and it is illustrative to see, the Phillies valued it at $2.8 billion, and then you have to ask, with seeing those valuations kind of as the result of deals and knowing how much people are willing to pay for them, it has to lead you to ask, could we see a deal with the Braves?
Right, so there's been a persistent discount in other sports assets. This is a little bit different because this asset is controlled by John Malone and the folks at Liberty Media, who split it off just about a year ago in July, in my view, as to position it for sale to a private buyer who can capture that trophy value and close the discount to private market value.
Would we potentially see a sale of part of it, or do you think it's more likely would be the
you'd sell the entirety of the public company.
Gotcha. So we always talk about what a risk could be potentially, and in this way, you say boredom is kind of a risk. In other words, like if no catalyst, you go kind of muddle along without a deal or something else happening.
I use boredom in particular because a lot of people find baseball boring. It's not. It's gotten more exciting with some of the rule changes. But yeah, listen, there's not a lot of downside, in my view, to the private market value of this franchise. It's not like it's going to get technologically disintermediated or they're going to fall on their face in terms of earnings. Really, it's just a matter of the discount persisting for a very long period of time because there's not a transaction to surface the value.
Do you happen to be a Braves fan also?
I am not a Braves fan. I am a New York Yankees fan.
I was going to say, your accent implies you would be more a Northern fan than an Atlanta Braves fan. And you guys do own Atlanta Braves in your portfolios.
Our clients are actually the largest shareholders of this company.
Okay, there you go. So let's talk about the stock you don't like. This one is interesting. It's Disney. Now, these shares are up over the past year. There's been a lot going on with Disney, obviously. The first reason you call it analog dollars for digital dimes. What do you mean by that?
So first of all, let me preface this by saying, before I get all the Disney nerds out there mad at me, Disney has fantastic intellectual property, and it's run by a very great leader in Bob Iger, but it's still not immune to the forces impacting the media industry. And I started as a media analyst 20 years ago, and I'm very familiar with those. And that's basically this concept that media companies were over-earning for decades in the old big pay TV bundle system. That has come apart with streaming, and it means that the companies are going to earn less going forward. And Disney's done a pretty good job of transitioning their business to direct to consumer, but it's never going to be as good as it once was, and still has some challenges in the immediate term.
And when you also say analog dollars for digital dimes, is that they do have an analog business also in the form of the parks. but they're also investing all this money in trying to make streaming sort of work.
Yeah, and the parks business is more than half of the EBITDA, more than half of the cash flow of this company, and more than half of the value too. And we still like that business on a secular basis. The experiential economy is one we've been a proponent of. It actually it works for the Braves as well. But that one actually has some cyclical challenges coming up.
Well, yeah, and let's talk about that, the economic sensitivity. Those parks are not getting any less expensive.
That is for sure, for those of us with children who've been there recently.
Yes.
And both Comcast, which owns the Universal Parks, and Disney have called out a moderating demand this summer in their parks, just as we get through COVID, normalization, and frankly, as the consumer is a little bit strained and can't spend as much.
And then we showed that stock chart at the beginning where the stock has appreciated something like 18.5% over the past year. And as I said, there's a lot that's been going on, namely a big proxy fight, right, that has helped in part drive the shares up. What now?
Yeah, exactly. And that's sort of the issue, is that a lot of the catalysts are in the rearview mirror, whether it's the tri-end proxy battle that you referenced, taking costs out, getting the DTC business, the direct-to-consumer business, to profit-neutral profitability, which they've all done, and check those boxes, and that's why the stock has done well. From here, it's going to be more difficult. It's trading at call it a 20 times kind of multiple, maybe a slight premium to the market, and there's just not enough of a margin of safety for us to continue owning it.
Okay, so let's talk about what then could go right that would maybe change your view. They do have good assets. They do still have Bob Iger in there. We don't know what's happening after Bob Iger, but he could turn the ship.
From here, it's largely an execution story, and if they over-execute, if they take more costs out, if they get direct-to-consumer right faster than we think they will, the stock is going to continue to do well. The other thing I'd mention is this is an industry that's undergoing consolidation. You've got Paramount, the subject of a takeover battle. Warner Brothers Discovery could be another one. I don't think it's likely that anybody buys Disney, but there have been whispers of Apple, for example, being interested. Again, I don't think that's likely, but it's not a non-zero chance, and that is a risk to the upside.
Now, you said you wouldn't want to own Disney, or do you guys have some Disney?
We've owned Disney in the past. We've been saying goodbye to it.
Interesting. Okay. But you still have a little bit, but you're working it down.
And we're very tax sensitive, so we have clients with very low basis, for example.
Understood. Chris, thank you so much. Let's summarize what you're telling folks here. You say you would buy Atlanta Braves holdings based on its significant discount to sport teams' private market value. On the other side, you think avoid Disney amid the decline of traditional media and lack of catalysts going forward. Chris Marangi, good to see you. Thanks for coming in. And thank you so much for watching Goodbye or Goodbye. We'll be bringing you new episodes 3 times a week at 3:30 p.m. Eastern.